Hey guys, my name's Mike. Thanks for joining me on another video. I want to speak to you about the property insurance marketplace and how difficult it is for many people to insure their property. Their hard-earned, valuable assets, whether it's their personal property, such as their home, or even their automobiles, maybe an investment property where they're renting out the space, or commercial property, a building, their tools, their equipment, their business automobile, all very difficult. I've been in the business for more than 20 years. I speak to people, colleagues that have been in the business every single day longer than me, and we have never seen a more challenging property insurance marketplace than we are seeing now.
Never.
Fourth quarter 2023 going into 2024, it's highly anticipated that the marketplace is not going to get better for the consumer, for you, until 2025. 2024 is going to be another difficult year.
We got this.
Of rising premium, less options, more carriers restricting coverage or pulling out. When I say restricting coverage, I'm not just saying that insurance companies are charging more money to insure property. I'm saying that they're not writing coverage at all. They prefer not to do business than lose money in the current property environment. When I talk about restricting coverage, I'm talking about checking that policy for forms, for endorsements, for exclusions, for ways that insurance companies are adding limitations on their coverage to make sure that they're not paying out more in claims. Now, people ask me all the time, why is this happening? Well, there's a lot of reasons.
Why?
You know, we can go back and forth about whether it's the regulatory environment, difficult for carriers to do business in certain states because of restrictions on rate increases, or the way that they can underwrite in certain areas, catastrophic events such as fires, hurricanes, tornadoes, in areas that insurance companies haven't seen before.
We've never seen this before.
Reinsurance problems, capacity problems. That's something that the consumer may not realize, but most of the insurance companies that you and I speak about on a day-to-day basis, that when you look at your declaration page and you see the insurance company that's giving you coverage, that's not the company that's taking on most of the risk for the loss that could occur on your property. There are reinsurers that might insure up to 75% of that $1 million limit, or that $2 million limit. They might take on most of the risk. Now, for an insurance company that you or I purchase coverage from to get reinsurance, to ensure that they're backed, okay, so that they're not taking on the full risk that they're providing, they have to spend money and go out and buy the reinsurance just like you or I buy insurance. Prices for reinsurance have skyrocketed.
$1 million.
For many, many reasons. Losses have a big factor in that. Catastrophic losses, such as the unfortunate fire that we saw in Hawaii, the wildfires that we've seen in California or throughout the western states, the hurricanes that we've seen in the south, flooding in parts of Texas and the northeast. It's all over. It's widespread. Inflation. The inflationary environment has cost insurance companies more money. And because they're spending more money, they have to collect higher premiums from the insurance carriers, which in turn have to collect higher premiums from us, but they also want to limit their exposures. This is something that people don't think about. Let's say in the state of California, 3 major insurance companies that insure 30 to 40% of properties in the state decide to no longer write business in California. Now, all of a sudden, smaller carriers are getting more exposure or more opportunity on their desk, but it might not be opportunity that you think. It might not be an opportunity for them to make more money. It actually might be an opportunity, or it might be a detriment to them, where now they're taking on more exposure that they really can't assume, that they don't want to take on. They don't have the means. So now they have to leave. It's this big snowball effect. And what it's coming down to is a harder marketplace to secure coverage and more costly. So what can you do to make sure that you can protect your hard-earned assets? Well, if it's in personal lines, if it's a homeowner's or an auto, making sure that your property is up to date. Insurance companies are going to start asking for more of this. They're going to want to see, is your water heater newer? Has your roof been updated? Are your electrical systems and plumbing systems up to par? What does your claims history look like? They're going to want to see that you have less claims on your property. Okay? They're going to want to see that you're not in a wildfire area. If you are in a prone area, what type of services do you have around you to ensure protection for your property? Now, what type of defense systems do you have immediately in your property so that brush is not butting up against the home? So there's areas that the fires can't travel. What's your siding? What's the makeup of your home? Do you have sprinkler systems? Is it a newer home? Fire alarms, theft protection, all that kind of stuff comes into play when insurance companies are reviewing and figuring if they can insure your property. When it comes to commercial property, same types of things apply. When insurance companies are looking to insure a building, they're going to want to see what kind of updates have been done on the building. If the building is older, is there a new roof? What type of electrical systems are in place? Have they been replaced? What type of pipes and plumbing? Of course, the older these systems, the more likely a claim can happen, and insurance companies are trying to limit their exposure. They're also going to want to know about HVAC system. They want to know about the surrounding areas around your building. Are you in a wildfire prone area? Do you have hazards around the building that have elevated risk for loss? Minimizing loss is something that you should think about doing so that when you go to the carrier, you go to the marketplace, when you hire an insurance agency to go out to market for you, that they can paint a good picture about the property that you're trying to insure. Now, here at the agency, when we start to work on an account, this is all the stuff that we're going to want to ask. It may seem like we're asking a lot more information than we have in the past. It's because we are. And it's not that we're trying to make your life miserable or create more work for you, but we know what the underwriters are going to want on our end. So we're trying to collect all that information up front to ensure a smoother process for you or client. The same goes for a renewal. If we get a non-renewal notice from your insurance company, we are going to alert you immediately.
I am telling you right now.
We're going to start gathering information in the file to go back out to market to try to replace that coverage for you. We're going to ask you for information. Please provide it in a timely manner. Some of the information may seem irrelevant to you. It may seem like it doesn't make any sense. Why are they asking for this? There's reasons.
What reason?
Again, very difficult, tightening, challenging marketplace for reasons that are going to cause premiums to go up, or in some cases, insurability is not going to be guaranteed that you can secure insurance. To work with your agent, work with your broker, get all the information that's needed so that they can go to market and get you the coverage that you need. If you're having challenges and you would like our help, you can call our office at 858-384-1506, email hello@foagency.com, and one of our staff members will reach out and do what we can to assist you with your property insurance needs. Thanks again for watching this video, and we hope to see you in another one really soon. Take care.